Ladies and gentlemen, good day and welcome to the Max Ventures and Industries Q3 and FY22-23 earnings call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Vachani, Managing Director and CEO, Max Ventures and Industries. Thank you, and over to you, sir.
Good afternoon to all. Thank you for joining us on the Max Ventures and Industries Q3 and 9 months FY23 earnings conference call. Along with me today, we have our CFO, Mr. Nitin Concall, our Chief Operating Officer, Mr. Rishi Raj, Mr. Amit Midda, Head of Max Asset Services, and Archit Goel, who leads IR for us. We also have SGA, our Investor Relation Advisors, on the call. The presentation and press release has been issued to the stock exchanges and uploaded on our company's website. I hope you've had the opportunity to go through the same. This year, your company has embarked upon the next growth of journey, which we call the Max Estates 3.0 journey, wherein we had exited the specialty packaging films business and redeployed the capital to expand the real estate portfolio. The company also entered into the residential segment, thereby adding a new asset class in the portfolio. With acquisitions this year completed and those in pipeline, we will be ending financial year 23 with a real estate portfolio of almost 8 million square feet, diversified across Delhi NCR, across asset classes of commercial and residential, and across the risk spectrum. With our focus on exceptional design, sustainability, and end consumer experiences anchored around the work well and the live well philosophy, our endeavor is to become a preferred choice for all stakeholders, including customers, communities, shareholders, and employees. I would now like to share the strategic overview of the company and where we stand today. The company has built a strong portfolio of projects which will fuel the next level of growth. Max Estates completed office projects, Max Towers, and Phase 1 of Max House remain 100% leased with a 25 to 30% premium to the micro market. Collections continue to be on time and in full. Progress on Max Square and Max House Phase 2 is on track for completion in Q4 FY23 for Max Square and in Q2 FY24 for Max House Phase 2. We are very confident to fully lease the project over a period of 12 to 18 months post the completion in Q4 FY23 for Max Square. Max House Phase 2 is being built on similar lines to Phase 1 with a larger leasable area of 150,000 square feet. New York Life Insurance has been onboarded as an equity investor and has committed 290 crores in our SPV in Gurgaon Sector 65 for our office development project. The SPV is called Acreage Builders Private Limited. Max Estates and New York Life shall be 51 and 49% shareholders respectively in this entity, Acreage Builders. New York Life has been a strategic partner in the real estate business since inception in 2017. They hold 23% in the holding and listed company, which is Max Ventures and Industries Industries Limited, and have also co-invested in Max Square Phase 1 and Phase 2 for a 49% stake, taking the cumulative commitment of investment in the group to rupees 800 crores. They continue to evaluate co-investment as a strategic investor in our commercial real estate business. As I mentioned, during the year, we have also entered into the residential real estate segment with an acquisition of a 10-acre land parcel in Noida. We plan to launch the project in the middle of commercial year 23. This will be a boutique development powered by our live well philosophy, promising an elevated quality of life through pioneering design, well-being, wellness, and sustainability. It will be a premium project, and the gross development value is estimated to be in excess of 1,300 crores. On our corporate structuring, we have received the approval for the composite scheme of amalgamation by NCLT. On the receipt of approval, Max Ventures will merge with Max Estates Limited. The date of hearing has been fixed for May 1, 2023 by NCLT Chandigarh, and the amalgamation is expected to be completed in the first half of 2023. This will simplify the corporate structure and enable us to rename the entity as Max Estates, a move that will resonate with the real estate as our only focus of the company. I'd also like to welcome our new colleague, Amit Midda, who joins us as Head of Max Asset Services. He has over 26 years of cumulative experience, with prior experience in leading operations at DLF, the Oberoi Group, Hilton Group, Marriott Group, and JP Hotels. With this, I'd like to hand over the call to Rishi Raj, our Chief Operating Officer, for a detailed business update.
Thank you, Sahil, for the strategic overview. Let me first give you the project-wise detailed business update and then move on to the development pipeline. Let us start with Max Towers. Total leased area owned by Max Estates in Max Towers is now 100% occupied with leased area of 3.02 lakh square feet. Lease rental income from Max Towers increased by 15% year-on-year to rupees 84 million in Q3 FY23. For 9 months FY23, lease rental income increased by 12% year-on-year to rupees 249 million. Full year rental of Max Tower is expected to be about rupees 350 million in FY23. Moving on to Max House Phase 1. Max House Phase 1 is 100% occupied as well. The total leased area of 1.05 lakh square feet. Lease rental income from Max House increased by 48% to rupees 35 million in Q3 FY23. For 9 months FY23, the income has increased 3x from rupees 35 million in 9 months FY22 to rupees 108 million in 9 months FY23. Full year rental for Max House Phase 1 is expected to be in the range of rupees 150 to 160 million in FY23. Before talking about our commercial office development under construction, let me briefly share market perspective for commercial office leasing. The calendar year 2022 witnessed 46% increase in net leasing to 38 million square feet pan-India, only 7% short of 2019, and second highest absorption over the last 1 decade. The last quarter witnessed some sluggishness in demand, and this quarter is expected to remain slightly subdued in light of global macro environment. The near to mid-term outlook for India as an economy as well as office market, particularly for quality development, is expected to be very positive. The India's dominance as global outsourcing offshoring hub will only further strengthen, and this in turn will create new office demand supported by growth in sectors like manufacturing and healthcare. Now coming to Max Square, the work is on track and is expected to be completed in Q4 FY23. The company has received Fire NOC, IGBC Platinum certification, and is expecting to receive the occupancy certificate for the same by the end of February 2023. The company has got good pipeline of leasing for Max Square and is confident to fully lease the project within 12 to 18 months of the completion. For Max House Phase 2, work is on track and is expected to be completed by Q2 FY24. This is being built on similar lines to Phase 1 with a larger leasable area of 150,000 square feet. A very robust leasing pipeline is already in place, including from existing tenants looking to expand within the campus itself. The weighted average monthly rental rate continued to be at significant premium to respective micro markets for both the office assets, currently at 106 rupees per square feet per month for Max Towers and rupees 125 per square feet per month for Max House Phase 1. Now let me give you an update on new acquisitions. First, on our entry in Gurgaon through acquisition of a SPV called Acreage Builders Private Limited. Max Estates Limited has completed the acquisition of balance 2.39% equity share capital of Acreage Builders Private Limited on 2nd February 2023 at an enterprise value on 100% basis of rupees 322.5 crores. Consequent to the completion of acquisition, Acreage Builders Private Limited has become a step-down wholly owned subsidiary of the company through Max Estates Limited. Also, New York Life Insurance has been onboarded as an equity investor, committing rupees 290 crores in this project. Max Estates and New York Life shall be 51-49% shareholder respectively in the SPV, and this SPV has a license to develop commercial project over area measuring 7.15 acres located on Trine Golf Course Extension Road in Gurgaon. The total developable leasable area is 1.6 million square feet with a revenue potential of rupees 160 to 200 crores per annum. We have already initiated the work on concept design and onboarded Gensler, a globally renowned design and architecture firm founded in San Francisco, California. We are targeting to get all approvals to start the construction of phase development in Q3 FY24. Now coming to our second project under construction. This is regarding the entry in residential in Delhi NCR through acquisition of a 10-acre land parcel on Noida Expressway. The timing is appropriate with structural turnaround in the performance of residential asset class pan-India. The calendar year 2022 sales surged 9-year high to 310,000 units pan-India. Despite inflation, the interest rate is still lower and affordability quotient higher than previous cycle and is backed by end user preferring quality communities from credible corporate developers. With 20 to 25 units per acre, this will be one of the least dense residential projects in Delhi NCR, bringing Max Estates live-well philosophy to life, aided by 7 acres of landscape, farms, gardens and lawns and state-of-the-art amenities and facilities. Max Estates flagship residential community is on track with respect to design and approval timeline to be ready for launch by mid of calendar year 2023. With total development potential of 1 million plus square feet of saleable area, the project aims to deliver a gross development value in excess of rupees 1,300 crore. Finally, on acquisitions in pipeline, we are on track to close the documentation of 4 acres of commercial land parcel with development potential of 1 million plus square feet of leasable area, contiguous to existing Max Square development, which we had won in e-auction conducted by Axis Bank. In addition, we are in final stages of locking in a residential opportunity in Gurgaon. With series of successful acquisitions this year, we are on track to achieve a well-diversified real estate portfolio of almost 8 million square feet by the end of fiscal year 2023, 3 to 4 times that we had in FY22. With this, I hand over the call to Mr. Amit Midha, Head of Max Asset Services, for the update on the same.
Thank you, Rishi, and good morning to everybody. At Max Asset Services, we provide end-to-end managed office services, including but not limited to the fit-out leases, fit-out design and build, and full-service office operations. Our managed flexible office offerings, Workwell Suite Center at Max House Okra, continues to be 100% leased. In addition to all aspects of facility management like upkeep, pantry operations and IT services, we are now looking at adding concierge services for ease of our tenants to run some errands while they are busy at work. This will be a great value add and further improves stickiness. As a part of our work well philosophy, we continue to differentiate our tenants' experience by continuously curating ecosystems of amenities like fitness centers, salons, an early learning center, shuttle service, meditation space, multi-purpose halls, cafeterias, sports facilities, and multitude of F&B options to truly enable our clients to work well. In addition, we collaborate with our tenants continuously and add any bespoke service solutions to our services as and when desired by our tenants. With an aim to uplift our asset with the best-in-class facilities and becoming more operationally efficient, we are deploying various digital tools across all verticals, such as parking management, lift management, amenities booking, visitor management, air quality monitoring, and we are now working on creating a community platform, which is an app which will augment our engagement and networking with our clients, further helping us serve them better. We expect the facility as well as design and build service business of Max Asset Services to witness growth in FY23 and 24 as a high percentage of offices are now open and expected to avail our services. Thank you very much. I now hand over to our CFO, Mr. Nitin Concall, for the financial updates.
Thank you, Amit. Good afternoon, everyone. Now let me give you the financial highlights for 9-month FY23. The consolidated revenues for 9-month FY23 increased by 17% year-on-year to rupees 840 million. Consolidated EBITDA increased by 14% year-on-year to rupees 240 million. Consolidated profit after tax stood at rupees 139 million in 9-month FY23 as compared to rupees 2 million in 9-month FY22. Speaking about our liquidity position, gross debt stood at rupees 7.3 billion as on September 22. As of this, 50% of debt is on the lease rental discounting model. Cash and equivalent stood at rupees 723 million as of December 22. We are maintaining a debt equity ratio of less than 0.66. I would now like to hand over the call to the coordinator for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may please press star and 1 at this time. The first question is from the line of Rajiv Sehgal as an individual investor. Please go ahead.
Am I audible?
Yes.
Yes.
Please go ahead.
The management has indicated that Max Square is likely to be ready by March 2023 and Max House Phase 2 would be ready by September 23. And thereafter, the company needs 12 to 18 months to lease out the 2 properties in full. So that leads us to believe that FY26 will be the first year when the company will get the full benefit of whole year rental income from Max Square and Max House Phase 2, in addition to the existing properties of Max Star and Max House Phase 1. So against this background, is it reasonable to assume that in FY26 we can expect a minimum PAT of about 300 crores?
So, Rajivji, good afternoon. This is Nitin Concall. So, on the first thing, we can expect the full year lease rentals of Max Square and Max Square Phase 1 and Max House Phase 2 to hit the balance sheet in FY25. And as far as the PAT of 300 crore rupees, so we would we would start getting lease rental income, full year lease rental income coming to us in FY25. And from FY26-27, we would start realizing our residential income. So that would be a function, PAT would be a function of those numbers.
Okay. So as I said that it's in FY26, you would get the benefit of Max House Phase 2 as well as Max Square. Am I right?
So Ajit, this is Rishi. Just to clarify once again, for Max Square Phase 1, we said 12 to 18 months from completion, which is February, March this year. For Max House Phase 2, which is getting completed in September of 23, given the size of the development, our endeavor would be to lease that within 12 months. So for both the projects taken together, a substantial portion of full year lease potential will kick in FY25. As far as other sources of income are concerned, for example, as Nitin said, as far as residential is concerned, the recognition of income from residential, our first special, will go to FY26-27 following the accounting principles when the possession will be delivered. And as far as new commercial projects are concerned, for example, Max Square Phase 2, we are expecting Max Square Phase 2 to get completed in 3.5 years from now, followed by lease in Max Square Phase 2.
So then can you give us an estimate of your rental income for FY25 and FY26?
Second, for FY25, we would have Max Tower and Max House Phase 1 fully leased. And in addition to that, we expect certain portions of Max Square Phase 1 and Phase 2 of Max House also getting leased. The lease rental income can be expected to be in the range of 100 to 120 crores for FY24.
FY24?
Yes. And with the total potential of
FY25 and FY26?
So what is happening is once the projects are fully leased, the way we look at it is in terms of a Max Square Phase 1, we expect a total leasing potential of close to 60 crores. Max House Phase 2, we're expecting a leasing potential of in the range of 25 to 30 crores. As we mentioned, in the case of Sector 65, the total leasing potential is in the range of 160 to 200 CR, and in the case of Max Square 2, a total leasing revenue potential of 100 to 110 crores.
Okay, fine. My next question is, by when do you expect to receive the NCLT approvals for development of 2.5 to 3 million square feet of Delhi 1?
So, Rajiv ji, the good news on that is that the order is reserved, and the plan, our resolution plan has been heard by NCLT. The order is reserved. In terms of when the order will be released to us, difficult to give a definitive timeline, but we are hoping that in this financial year itself, we are able to get to see what the final order is.
Thank you very much. Thank you.
Thank you.
Thank you. The next question is on the line of Faisal Hawa from HGRY & Company. Please go ahead.
When do we expect our ROC and ROE to be, north of 18 to 19% once, most of these projects are underway? And is that a focus area for us within our KRAs also?
Yes. Good afternoon, Mr. Faisal Hawa. This is Nitin Kansal. We are expecting our ROC and ROE to be in this range by FY25-26, when we would be recognizing the revenues coming from our residential projects in Sector 128 and following the accounting principles. And this, as a concept, this is also flows in the KRS of the senior management team, which clearly defines the unit level IRR expectations of 20% and overall ROE, ROC of the company in the range of excess of 20%.
So when will it happen that, for the entire revenue of the company and entire balance sheet, will be having this ROE, ROC? Because, what may happen is that some projects are giving that ROE and the others are, underway. So, it as a ballpark, it will never show.
So what happens is, from FY26-27, it becomes a continuous process whereby the first project, residential project of Sector 128 will get delivered, which will be delivering an ROE, ROC. And as we have also stated in our objective that we would be launching we will be taking on board 1 million square feet of residential and 1 million square feet of commercial project every year. So as a process, every year starting from FY26-27, we would be having a stabilized revenues coming from 1 million square feet of residential and 1 million square feet of commercial incrementally year on year, in addition to the projects which we already have. So starting from financial year FY26-27, the ROE and ROC will start getting reflected on the balance sheet numbers. But having said that, starting from FY24 itself, when we would have launched our Sector 128 project, you would have started to visualize the cash collections and the total sales potential, where all getting very amplified, clear to the shareholders.
And sir, apart from the brand, which is like a clear USP for the Max Group, can you name three things which would be a clear differential in selling our properties? Because real estate is not it's almost like a commodity. So once we apart from the brand, what are the two?
Absolutely. Hi, this is Sahil. I'll take that. Our focus is on a very differentiated consumer experience articulated through what we call the live well philosophy. So like in the office space segment, we have captured the work well philosophy, and there are 14 elements that are part of that. So it is it's a scientific approach to ensuring that that the live well philosophy is encompassed in each of our residential developments. Our brand will stand for a sense of, obviously, a huge sense of generosity, luxury, aesthetic sense of design, and if I may say, a Indian luxury brand, so to speak, rather than aping what has happened in the West. It is going to stand on the factor of local materials, but very high-end and luxurious in terms of experiences, in terms of design, in terms of hospitality, in terms of overall the live well philosophy. So we have already piloted this in the office space segment, and we've got tremendous success, not only in terms of traffic, in terms of clients, but also a premium of the pricing. And we are confident to be able to replicate this in the residential space as well. Thank you.
So we are clear that in most cases we will have a partner who will take on the financing responsibilities, and we should be focusing only on building the brand and executing. So is that going to be a clear-cut roadmap forward also?
Yeah, this is Rishi. I'll respond to that. There are two verticals, commercial and residential. On commercial, as we have already stated, we have New York Life as our strategic and financial partner, and they are continuing to co-invest 49% as we expand in our commercial office space. As far as residential is concerned, in residential, we at this point in time are following a model which is mix of outright purchase from a balance sheet, which is how we did Sector 128, our flagship residential community in Noida. The second one that I talked about, which we are exploring in Gurgaon, is going to be a joint development model, wherein the land will be brought by landowner and we will be doing the construction. In future, we may explore a joint venture partner in residential as well, but not concretized yet.
Okay. Thanks a lot for answering my question so well.
Thank you.
Thank you. The next question is from the line of Prachi Sharma from Ace Investors. Please go ahead.
Hi, sir. I just have two questions. Firstly, are we seeing any slowdown in the commercial real estate in the past few months? And second being, by when do we plan to launch the residential real estate in Noida? And what is the interest we are seeing for this project?
Okay, so I'll answer all the three. As far as slowdown in commercial office is concerned, as I stated in my narrative, while calendar year 2022 has been exceptionally good, only second to 2019 peak that we have seen in last one decade, yes, there has been some sluggishness and slowdown in decision making in last quarter and expecting it to be in this quarter. Having said that, our view as far as India as an economy, as far as office market in India, particularly in NCR is concerned, for quality developer, which is far and few, is very, very positive. And whatever is happening globally, ultimately will have a positive rub-off effect. As I said in one of my illustrations, the trend towards global outsourcing and offshoring because of cost and talent arbitrage will only improve. In addition, we are already seeing increase in demand from other sectors beyond tech, which is manufacturing, healthcare, financial services. And if you look at the numbers, the share of these sectors have relatively increased compared to the tech sector. So in short, the near to mid-term outlook for office, particularly in NCR, is positive. So that's on number one. Number two, in terms of the launch of residential in Noida, as we have stated, we are targeting mid of this calendar year. As far as interests are concerned, as we have yet not got RERA approval, we are not out there in the market seeking interest, but we are very, very confident of the product and the experience that our first residential community will deliver. We are very, very confident of its take-up post-launch.
All right, sir. This is very helpful. I'll get back in the queue in case of any other questions.
Please. Thank you.
Thank you. The next question is from the line of Vasant Shukla as an individual investor. Please go ahead.
Yeah. Hi, sir. Hi, everybody. I have a few very basic questions. I would start with basically, I have been a long-term investor in this since 2017. So, what I am realizing now that now we have got the focus right, we are working towards it. But just I would like to understand, because we have raised a lot of money from the markets. So as a shareholder, we like our shares to do well. That is what we anticipate of the company to do well and subsequently the share to do well. What I have realized is over a period of last 5 years, Max Ventures has raised close to 1,500 to 1,700 crores through various routes like rights issue, then they showed the specialty business. Then, from all these aspects, so this 1,700 crore that we have raised over a 5-year period, what has been the utilization of that 1,700? Because I would like to know in slightly more detail, because that is not very clear to me. Because if we have raised that kind of money, we should be generating more revenue per se from that kind of money. I understand that it's a long gestation period is there, but beyond a point, even long-term investor also needs some returns. And apart from that, I would also have another question regarding your investment in Azure Hospitality. Have you written it off? What exactly is the status of the same, or whether it is part of Max estate or not? So that also I would like to know. So if somebody can help with that. So these are basically 2 questions I have right now.
Hi, Vasantji. Thank you so much for your very, very pertinent question and being our long-term supporter and investor in the company. I will take up, this is Rishi, I will take up first part of your question and I'll ask Nitin to take up the question on Azure. As far as, if you look at all the capital that we have raised, which is through combination of rights issues, followed by exit of our packaging film business, which generated around 650 odd crores. We have redeployed the entire capital in real estate, starting with commercial office, which is Max Towers and Max House Development, which was totally done out of our balance sheet using these capital. And more recent raises that we have done, we have redeployed that in the acquisition of our residential entry in Noida and our Gurgaon entry in commercial office space. Our endeavor, as we also stated earlier, our endeavor is to remain very much focused as far as real estate business is concerned, particularly in Delhi NCR, and really focus on two vertical, commercial and residential, and continue to follow a very capital disciplined approach in terms of where we deploy as the light through equity partnership. As you have seen, we bringing on board New York Life, who have already committed around 800 crores to help us on the growth journey, or through a model which is beyond outright, through a combination of joint development, which you will see in residential or joint ventures in future. So in short, the capital that you are talking about has been redeployed across these commercial and now residential asset classes. As far as, yeah, go ahead.
So sorry. So what return you are expecting from those deployment? Like, so 1,500 crores should be generating close to at least 10% annually, right? Which is not happening, or which will happen going forward. Then maybe if you can elaborate on that.
Absolutely. I think,
yes,
as you rightly articulated, the underlying fundamental performance should and will and is already getting translated into what we see as far as performance of stock market is concerned, and we do keep a close tab on it. The way we look at our investment, following a very disciplined capital deployment approach, is to evaluate every project on its merit, and we have a very rigorous approach of evaluation and underwriting, and we only deploy where we are confident of getting a pre-tax IRR or our internal rate of return of 20% or more. That's how we deploy, and this, as we will execute, and as the cash flow starts coming in following those business cases, this will all start getting translated further in our stock price movement. So that's the response to your first question. Coming to Azure and what's happening with Azure, I'll request my colleague Nitin to respond.
Yeah. Good afternoon, Mr. Shukla. On Azure investment, we had invested in Azure in two tranches, a cumulative amount of close to 72 crore rupees in 2017 and 18. Since then, during COVID, the business went through a lot of pressure, and we had taken an impairment of 27 crores in September of 21, and currently we carry the investments in the books at rupees 45 crores. However, post the COVID era, now the business has really improved significantly in the case of Azure Hospitality, and they have significantly exceeded the revenues which they were hitting pre-COVID times also. With currently they are doing revenues in excess of 200 crore rupees per annum, and with an EBITDA margins of more than 30%. As we speak today, the business is on a recovery path, and we are hopeful to recover our full investment on Azure Hospitality.
So we will just be recovering the investment, or like if we see the other sectors, like some companies have started doing pretty well. So we just anticipate that we will recover back that 27 crores. That's what you're saying.
So what we are anticipating to recover the full amount of investments which we had made in Azure Hospitality, 72 crores.
Achha, okay. But you don't anticipate that will be a good investment for you in the long run. Like it's kind of it's not going to give you any return. So just you will be recovering the money. That's it.
So what is happening, conservatively, we're taking a number to recover investments because the business has gone through a lot of pain through the COVID times. Although our aspirations would be to make returns on that, but as of now, the guidance would be to recover our capital on the investment.
Understood. Sorry to continue the first question again. I'm sorry, I'm taking a bit time. Just wanted to understand, like, suppose we are investing close to 2,000 crores. So a IRR of 20%, then you will anticipate close to 400 crores of profit, right? Technically every year. So do we really see that kind of profitability even in 26, 27 or beyond? Do we really anticipate that? I'm just asking a question based on just the numbers. That's it.
Sure. So,
yeah.
So, Vasanji, now IRR as a metric we use to evaluate project level cash flow. But coming back to return on investment question that you have, we expect, as Nitin was explaining earlier, once residential income gets recognized in our book following the accounting methodology, which is FY26-27, we are expecting to hit, or we are aiming to hit, a return on equity in the range of 15 to 20%. And we expect to maintain that level of return with a continuous churn in our portfolio by adding projects, both commercial and residential. So that's our endeavor and the long-term guidance and plan is.
Understood. So let's assume that in 2023, as stated, you will be 1 million commercial and 1 million residential will be available, or it will slip over to 24.
So what I meant was this return on equity of 15 to 20% is on underlying investment. That's clear. As far as we, just to answer on the size question that you have, we will be having 8 million square feet in our portfolio by end of this financial year, delivered, under construction, under planning. And every year, our endeavor will be to at least add 2 million across commercial and residential, so that by the time we reach FY26-27, every year, couple of million square feet comes online on stream from a income perspective.
Understood. Hopefully we achieve that, because now I think it's getting close to 5.5 years, and I think we are more on the talking side rather than executing side. That is what is happening, is what I understand. But yeah, like I understand that. Anyways, thank you. Thanks for answering the question.
But this is Sahil. I disagree with you. Sorry, this is Sahil. I just want to clarify. I don't think so. I think if you were to look at the journey of 5 years, here is what has happened. We did not start with a land bank. Today, the company has a development potential of 8 million square feet already signed. It has already 2 developed, fully leased assets. It has a pipeline of 2 office developments, one in Noida, one in Gurgaon. It has a residential development. We have established ourselves as a brand in the National Capital Region, and we are, at least our first development that we have is on track for a GDV of more than 1,300 crores. So I think we should not confuse the accounting methodology of real estate, which fortunately or unfortunately happens through the POCM methodology. So therefore, the numbers will get reflected when we are able to book the revenue, which is as per the POCM methodology in real estate, which happens in 3 years from now. But if you look at the pipeline of what we have, the asset base of what we have, the deployment of capital that has happened, and the assets that have been generated, particularly in so far the office space is concerned, that we have already executed over the last 2.5 or 3 years, the valuation of those assets in market today are significantly higher than what they reside in our book. So I just wanted to clarify that as an overall picture, and not to mention the fact that we have New York Life as an investor and continuing to grow our office space journey as well. Thank you.
Thank you. The next question is from the line of Nehal Jain from SK Securities. Please go ahead. Also, participants are requested to please enter star and 1 to ask a question. Nehal, over to
Thank
you,
you for the
please.
opportunity. So I just wanted to know that if you could give your views on the company's capex plans for FY24 and FY25.
Hi. Good afternoon, Nehal. This is Nitin Kansal. As we mentioned in FY24 and FY25, in FY24 we would have our Max Square Phase 2 and our Sector 65 project in full flow. And similarly in FY24 and 25 both, on the residential side we would have our residential Sector 128 project in full flow. What we are expecting to have a total deployment of close to 800 crores in total in next couple of years across this project. And the way it will be funded is that we are expecting to raise a debt of close to 600 crores on those two construction finance on the commercial real estate, and equity of close to 200 crores, which would be bought in by New York Life in the ratio of 49% and 51% by Max Estate.
Mm-hmm.
And just to give an overall perspective, to complete these projects which we have announced, we would be having a total capex outlay in next 3 to 4 years in the range of 1400 to 1500 crores, which will have incrementally 1400 to 1500 crores, and we would have, this will entail a total debt in the range of 1000 to 1100 crores, and equity contribution of close to 300 crores, of which 50% would be bought in by, 49% will be bought in by New York Life, and the remaining 51% will be bought in by Max Estates.
Mm-hmm. Understood. Okay, thank you.
Thank you. The next question is from the line of Samir Chadha from Chadha Securities. Please go ahead.
Thank you for the opportunity. My question is that we're seeing an increasing debt. So what is the optimal debt plan that we should have, going ahead?
So, sorry, your question is about the leasing plan?
Debt plan.
Debt plan.
The debt plan, yeah.
Yeah. So, Mr. Chadha, currently as we speak, we have a debt of close to 700 crore rupees in the balance sheet. This is made up of two components. One is the lease rental discounting debt, another is the construction finance debt. So in terms of lease rental discounting, the debt percentage is close to 50%, and that is also being that is basically a risk being taken by the bankers on our tenants and not on the company. On the construction finance debt, we have got New York Life as a partner in the company, in which New York Life holds 49%, but from an accounting perspective, the entire debt is reflected on the balance sheet of Max Estates. The risk of the debt is also shared equally between New York Life and Max Estates. Currently we stand at the debt equity policy or debt equity ratio of 0.6, and our intention is to maintain a debt equity ratio of not more than that.
Okay, so thank you so much.
Thank you. The next question is from the line of Akash Mitra. As an individual investor, please go ahead.
Yeah, thank you. So, sir, I mean, a couple of quarters back, I had this question that what's your plan for execution, because the presentation till then had been continuously speaking about we are planning, we are doing, but good to know. Congrats for that. We at least have a pipeline now to execute. Only a couple of questions, like on the residential side, which is where I think you probably might generate a significant alpha. So what is you have mentioned a Gurgaon project where you expect the sales to be 1300 CR, right? So what's the typical price per square feet you are planning for that? I just want to get a sense of where are you positioning in the market vis-a-vis the leaders like DLF and others in this area.
So, Akash, thank you, and thanks for your appreciation and compliment. This 1,300 crores, in excess of 1,300 crore that we talked about, is for our flagship project in Noida on 10 acres of land parcel, which has got 1 million square feet of total sellable area. So here in Noida, we are definitely looking at upwards of 13,000 rupees per square feet. The second project that we will soon lock in is in Gurgaon, and again in a very prime location in Gurgaon. We will share more details as we lock that in, but our target price segment is 10,000 rupees onwards, 10,000 rupees per square feet plus for this Gurgaon development as well.
Okay, for Gurgaon development. Sir, the second question is on the execution side. I see you have hired a few people recently. So you, so far, I mean, I don't know about your team size. That's not a public information. But I want to understand, like, you have invested a significant amount of tech like SAP and digital tools. So how do you plan to like make money out of the significant investments in a ERP like SAP? It would be a significant amount of money you have already committed, right?
Yeah. So Akash, let me step back a little bit. I think this is a very important question that you are asking, right? If we just go back several quarters, one of the big questions for us was growth pipeline, which we have solved for. Now that our capital is sorted, growth pipeline is sorted, the focus of the company is on execution, and for that execution to play well as per our promise, we need to invest in two things. One, getting the right people, the right talent, the right expertise on board. This is where you have been witnessing a series of new hires that we have done from different parts of the real estate and non-real estate world. And second, if you look at the history of any real estate company, one of the reasons real estate companies have not been able to survive long term is that they have not invested in processes and systems. So SAP is one of the many things we are planning to do to strengthen the processes so that we are not a 5-year, 10-year, but 100-year plus kind of a company. As far as investment in SAP is concerned, there is an investment, but on a lighter note, it's not as exorbitant as your question sounded to be. But we are very, very confident that all of this will help us achieve, for example, delivering more than 1,300 crore in residential project and several other projections we have made for other projects in commercial and residential.
Fair enough. And I think the rest of the questions have been already asked, so I'm good with that. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Mr. Sahil Vachani for closing comments. Thank you, and over to you, sir.
Thank you very much for your time and participation, and look forward to chatting with you next quarter as well. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Max Ventures and Industries Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your line.